Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Morning, everybody.
Good morning.
Matt, I got to straight away ask you a question.
Yes.
Did you fix that song at the end?
No.
That was like perfect timing. That was weird. Usually I noticed that Matt fixed it like 8 years ago and I haven't replaced it. But it sounded like that went to the end. Anyway,
I did not change it.
Welcome, everybody. Hope you enjoyed the 50 points up yesterday, followed by the 40 points down.
Yeah.
That's kind of how we do it in option land. So, I think some people probably had some Ricks on and stuff like that.
Yeah.
Maybe.
Yeah.
Matt, what was happening? And if you looked across the broad spectrum of people, what you think people were doing in option Omega land, what were they doing?
I think I saw mostly green posts yesterday. I had a pretty red day. Just listen, I say this all the time. Like a Rick is just a structure. There's a lot of people that trade common structures, but mine didn't go to zero, but it was mostly a loser just because of when it went on and the timing. And it honestly, what I'd like to do is I need to spend some more time in the portfolio, maybe with some trade blocks. And I'm thinking about doing multiple Rick structures instead of just having one, maybe having a couple that act different ways. Because I've said this before, I had a Rick that I loved. It didn't backtest as well, but it was a leg group Rick. And Thursdays are so crazy that I really want to find another Thursday one where you can kind of exit on both. Like you can leg group it up and exit both sides. It's on my to-do list along with many other things, but yeah, that's on the wish list. Yeah. What about you?
Go ahead.
I mean, small account challenge plays out exactly how we want it to play out / don't want to play out. On any given day, that SPX is going to be the majority of the portfolio wins, losses. And so, that thing is kind of just driving the ship right now. And, on a day when you're up 40 all day and then goes down, that's not going to work for it. So, again, the type of thing I look at with these type of trades, credit selling in general, is you look at the past numbers, place yourself, if you had just lost this day, place yourself in one of the losses in the trade log, and then look at the graph overall. And that's the way you kind of have to play it, is like put yourself back. Okay, that graph that looks so good to you that you wanted to trade this, the graph that just seems to go up all the time, place yourself on a random trade log, go back in time and be like, today was like that day.
And
lost that day.
I don't, did you and I feel like we just had this conversation. I can't remember if we did or not, but I did in my head. And that's exactly right. Like we've got this 1-3 that I'm documenting and doing a YouTube. I did a YouTube show on it. I
like the way that you make it sound like you're like hunting a whale. It's like a whale documentary. I've tagged it.
Listen, here's the thing. I think I've said this before. I was the first user of the O automation and had a spreadsheet for, I don't know how many trades I tracked, because we were obviously, before we had a beta, we had an alpha. Before alpha, we had a sandbox. And in between that, we had a meta. And that was where I was the first user, joined by Rust. I mean, I say that it was like a day or two before Rusty, maybe. And then and we were all doing it. But I I don't know how many trades just to see the accuracy and make sure it was what we thought it was, which it is. And so I have this problem where I kind of take for granted that like, yeah, it's gonna match, or you're gonna understand why it doesn't, like you fidgeted with it or this or that or whatever. And so I realized, yeah, we just don't have a good video of somebody who would come to OO clean, or somebody who's with OO and doesn't automate. Like, how close is the automation to the back testing? And so anyway, point is, I've been reevaluating this 1-3 because like it's green, but it's like green this much. I've showed it on here before, but I mean, this has happened before. So I'm just rolling with it. It's, we're just trading a one lot in this video. It's fine. It continues to match and be totally understandable. And it's just been holidays. Often it's a double calendar spread. Holidays can be tricky, and there's that time period, there's a lot of short weeks where you're not trading it. And so, listen, it's happened before, may happen again. If it gets to a situation it's never been into before, we'll have a circuit breaker. Troy, you got some circuit breakers.
Yeah, and we talk about that in our videos, on the small account challenge stuff.
The small account challenge, which is Tuesdays at 3:30, right there. Is that
Tuesdays 3:30?
Is that what you're referencing? In case anybody's wondering, there's the OO YouTube schedule, but that small account challenge, Troy, you've been getting a lot of interest in that in the Discord, I see.
Well, I told Matt yesterday, Dan, here's the secret I realized by watching all these YouTubers. I will use some of their marketing stuff, because basically what I'm going to do is I'll only market it on weeks when we're up on the portfolio. It's a simple trick.
Troy's learning. Well, we had a user tell us, more than one, but we had a user tell us, like, you guys, literally, he said, you suck at this. Like, you suck at marketing. Now, this was a while ago. We've really tried, maybe 2 years ago. But we're the anti-hype guys most of the time. Most of the videos you see on YouTube, this trade made me a bazillionaire, and you click on it and some dude selling puts.
Yeah. Hey, Troy, can I make a few quick,
please,
going backwards on the trading, but I do want to mention something real quick. You got me triggered on the marketing. Then I want to go back, talk about the market this week. And Rick's just made a couple notes. But again, there was a newsletter guy, probably shouldn't mention his name, even though I think I have, but I won't mention it. And he was like the king of newsletters. It's like My Pillow guy, the king of the My Pillows. But he was the king of newsletters, and he must have had 20 newsletters, right? Easily. But the thing is, from a marketing point of view, it was a gold mine. You say, why was it a gold mine? Because he had bullish newsletters, bearish newsletters, range-bound newsletters, stocks going up, the same stocks going down. So any week he had it covered, and the marketing would be he had one of 20 newsletters would make money every week, and you just pound that thing. And you just keep chasing it. But I thought it was genius. We used to actually get, when I was in the trading pits, had to mention that first, hopefully Tom's on. In the trading pits, we would see, it was called Blank's Army. That was the newsletter guy, his army. And I'd be in the Micron pit trading, and I'd see all of a sudden, buy 5 calls at $2. Next ant, buy 5 calls at $2. Buy 10 calls at $2. There'd be 40 of them. 50 of them, 60 of them. And we just watched the ants come in. We didn't really, because they try to buy it on the bid. And so the 4 of us in the pit would watch this. Like, here come, the ants come. What's that song? The ants come marching in. Hurrah, hurrah, hurrah. Oh, yeah. So after all the ants were in the cockroach hotel or whatever you call it, now we would look at them and say, okay, you have 50 guys buying 5. So maybe you have 400 calls trying to buy it on the bid at $2. And so you say, did you fill them? No. So what we would do is, right, because they had a limit order, right? And that's the problem with retail limit orders. Limit orders are fine. I want to buy it at 2. But should you buy it at 2 no matter where the price is? In other words, if it has a delta of 50, and the stock drops $1, should you still be $2 bid on that? You could get a better, lower it. Now you could say, Dan, it takes a lot of work, but what we would do is watch that 2 bid because we knew they had a limit order on. And we'd say, okay, stock's trading at, I'm making this up $100. So the guys in the pit to hedge it we'd put a bid in on the stock, maybe almost $1 lower, right? And sometime during the day, if the stock got $1 lower, there's still 2 bid on those calls. So we'd buy, if we had to hedge 500 calls at 50 delta, the crowd would buy 25,000 shares of stock combined. And then we'd say, sell your calls. So they were happy, right? They were happy they got it at 2, even though if they were smart, I shouldn't say smart, they were probably smart. If they were more aware, they could have canceled it, and when it went lower, kept lowering the bid, right? You can say that's too much work and they had to work or whatever, but they probably could have got easily a $0.50 better. So that was my story. Now, real quick, back to the week. When I think of, when I think of RICs, I think of long gamma and I think of gamma scalping. That's what I think of. I mean, any long gamma trade in the pits, ratio back spreads, the ratio back spreads, but again, not ratio back spreads 1 by 2, ratio back spreads buy 2, sell 1, buy 4.
Yeah.
So your net long calls or puts. I'm not talking about the 1 by 2, even though I'm going to do probably later on today, I'm going to do a ratio 1 buy 1, sell 2, buy 1, sell 3. That's popular in I think the retail options community. And I'm going to do it on the modeling, the OO, and I'll throw it to Matt this weekend because I see a lot of, I just get a lot of thoughts on that. But the RIC, I look at it as a long gamma trade. And when you take a week like this week in the SPX, market did nothing, right? I mean, net from last Friday's close, did we really do anything? Not much, right? But you had a little bit of candles, nothing crazy, but it was up and down and up and down. And usually with long gamma, to me, and that's what I'd love to do, and talk to Matt and Troy about this more, test the data to see, move a little bit closer to the middle of trading a RIC and leaving it alone, right? Versus incorporating, and Matt talked about this, what would you call it, Matt? Multiple leg.
Yeah, leg groups.
Leg groups, because 99% of the time in the pits, you would gamma scalp it. But before you get excited about gamma scalping, I think the end result is somewhere in the middle, because how many times people would say, okay, you're long gamma with a RIC. So it goes up, you get long deltas. So you sell out the call side, which is, I'll do a lot of time. But many times, and I bet you the data would show it, well, you know what? It kept going. It kept going up, right? But you sold it out. It kept going up, and you could have got more. So it's that fine line, but it does, you get long gamma as it goes up. Today, or this week, where I saw people who had on, at least what I saw, is people who had on, most people who at the beginning of the week or last week who had on long Vega. And most people did because the vol was lower. It didn't really pop till 18 for about an hour this week. So you had a couple down days, right? Was it Friday, Monday, Tuesday, or something like that? I don't have a chart front of me, but it was, no, what is today? Friday, Thursday, Wednesday, Tuesday, Wednesday. But you had a couple days where you were short delta from the market going up. And again, a lot of this is timing. Like Matt said, timing of when you put trades on. You could have had somebody made money with a DC and somebody lost. But when the market came down and vol went up, everybody that I saw that had on a double diagonal calendar, whatever, we've been putting calendars under the market because you can still be delta neutral, but have room to the downside. You had an opportunity to get out, right? But again, that's where I'm very intrigued with the testing is, and it's helped me a lot. The back testing is that, be patient, because why just, I did this yesterday. I had some calendars on that made like 7-8% in 2-3 days. but I cringed. But I said yesterday, I thought of Matt, I did, and I looked at the calendars. If I would have left them alone, most of them were up, 4 or 5 days later. It would have been 23%. And I was never in any big trouble with it, right? So it's breaking that, it's you can't say it's better to get out.
It's
early.
so tough.
Yeah, but that's where I mean, honestly,
the thing I like about calendars is I feel like it's taken me from 2022 until now to say this, but I'm pretty good about staying on the horse with them.
Yeah.
But I've seen them go from 40 to flat and -40 to +30 and higher VIX so many times. I had one Wednesday that was up like 30%. And then we took a dip. It closes at 8%. It's like,
and again,
that stinks. I mean, it's its size, but
yeah, I mean, if you said to anybody, if you could be up 30% on your DCs for a year, right?
Yeah, all of them. Yeah, that's great.
I mean, it is you're dealing, and it's a different, it's
a different skill. The thing is that the reason though why I still prefer that method of the short strangle related strategy to an iron condor is, iron condors typically, I mean, they can move that way as well. Like there's plenty of people this year who have stories of their condor was fine and then a tweet came out, wrecked, and you get wrecked with a side of stop loss slippage. And so I'm like, man, I'll take a calendar and it's the way it moves. And I'll take that every, I've increasingly graduated and gravitated towards those just because all those, a lot of the trades can do that. The advantage that people who trade the 30, 45, 60 DT stuff is it's not the roller coaster that does 27 loops and then goes down at the end.
No.
It's just a smoother ride.
But I would like to encourage testers in that use the back testing and all. I want to encourage them when, you think about it, when VIX gets in the upper end of the range, and I'm saying, when I say up in the upper end of the range, I'm not talking the extremes, right? Where we're that's to me, not the time necessarily to do a range bound type trade. You don't want the extremes. I think Steve from Navigation mentioned this the other time. He likes to sell high vol, but not extremes, because extremes means there's no stability. So when it's stable, I think when people are looking just to diversify, open the thoughts, people who in the community do 0-day iron condors or 1-day iron condors, and they will say when the vol's high, right? I love it because you're getting much more room. But I want to encourage people when the vol gets up and there's some stabilization in price. So you're getting in the upper end of the range. Like this week, we had as I shout out to a meet in the community, and I did one too. When we got up near that 18, not that that's massively high, but it's higher than we've been. Went out and did like maybe if it's the same principle, if it's 0-day, you get a lot more room on your iron condor. What the heck do you think you get on a 20-day or 15-day or 30-day iron condor? You're getting 300 points, right? If you go 21 days out, you'll get 300 points if you get a little bit of premium. So I would say test that, like not just the 0-day. I think there's appropriate times, not that you have to put a steady dose. I mean, I don't like doing 20 to 30 to 40-day iron condors unless there's some premium there. And people should remember one last comment that again, they're in the same family. Again, iron condors and DCs are related. You say, how are they related? It's the same stinking foundation. Selling out of the money call, selling out of the money put. That's called a short strangle. One would be more, I would contest, one would be more vols are in the lower end of the range and you're looking for reversion back to the mean. And one is when they're in the upper end of the range, reversion to the mean. Now, that's iron condors. It's a different ball game, though. I mean, to me, wouldn't you guys say when you're talking and teaching iron condors, You don't lump them all together. I mean, to me, I look at 0 day, 1 day, totally different game than doing a 20, 30, 40 day iron condor. It's just different in terms of how you would trade them, what considerations, mindset, right? Risk tolerance, whatever. I mean, it's the same, both of them are similar in terms of risk management. It's a very simple game. You get some good probabilities, but can you handle when it goes against you? You have the higher potential than a DC to lose 4, 5, 6 times what you made. Right. So I think, with a DC, you could be getting killed for 3 months.
That's right.
Then you pull a 40% and you're like, I'm flat. And somebody said, wait a second, you're lying. You were just down 40%. No, I had a 40%er, which you will not hit in a 30, 40 day iron condor stuff.
And so part of the, exactly what you're saying, Dan, part of the reason for that lately too, that whole, I was flat and then got up huge after a month or 2 or 3 or 4 of churning, is the way people are back testing. So when we launched in 2022, we didn't have near the feature set we had now. And so it was, I don't think we ever saw a DC exit that wasn't a profit target exit. And so what you would have is people would regularly take 15, 20, 25. I remember when getting 40% on a DC was insane. Now, this was also 2022 when vol was extremely sticky. And so what happened is as we started adding more robust rails, people realized over the long term, the DCs, if you can clump big winners together, that's where you really get the biggest bang for your buck.
That's right.
And to get those big winners, your win rate goes down, is what I'm saying. But the winners the winners got bigger. And so fewer winners, I'm just speaking in generalities, but I've a lot of backtests where this was true. So people stay on the horse for longer with DCs when they used to, because there's more safety rails. And the reason they do that is there's a potentially bigger pot of gold at the end of the rainbow. So that you can smooth out a DC's results if you take lower profit targets, but a lot of them that I trade, they're worse back tests. So it's if I can train myself to stay on the horse, and I mean, a DC that's a smaller size that loses 30, 40%, it's not going to keep me up at night. And because I know that the next week it can easily go for 30, 40%. There could be a larger size DC does the same thing. The sizing is essential. But it's taken a long time to build up. A long time. Guest on the show. Hello.
I mean,
I have one at home too with pink eye. So he sometimes comes in the door. So we'll see. Yeah. But Troy, what do you think about DC land? How are the SAC DCs starting out?
I mean, they're fine. They're all just, what's funny with these things is that SPX credit spread just is a mammoth. It's the Kraken compared to these SPY QQQ DCs. And so, you end up kind of, the DCs have been fine so far. I will say this real quick. Tom brought up a good thing in the chat. Shout out, Tom. Has Dan seen these 45-day iron condors with 5% profit targets? They never lose. So, Dan, apparently, if you do a 45-day iron condor and you just take a really small profit target, you never lose. Are you familiar with those ones?
No, but I mean, I've seen those flavors for years and people have done that. But again, it's like playing, to me, it's a game of Russian roulette, right? So you're making, when you think about 45-day, did he say a delta on those or no?
No, I think he's making fun of the martingale.
Yeah.
I was trying to steer the conversation back to.
Yeah, he just wants to go back to.
Well, I think it's the risk management. I mean, again, what I have adored, I don't know if that's a good word about the OO back testing is, Matt says world-class back testing. I say world-class rails. I mean, for me, my whole life has been, more in the risk management end. And when seeing that, I trust those rails and they're good, much better than myself. But they have the rails that you're thinking of. So why wouldn't you use it? But I think when you get into, any newsletter, any alert service, you got to dig into, you got to dig into when you have the big move, what's your plan, right? Any yo-ho, right? Me included, any yo-ho can throw out, we're going to sell 10 Delta iron condors. And statistically, we're going to win, billion%, you're going to win a high probability.
Yeah.
What are you going to do? Right. And you can do it. And that's where you have to look at the risk management, right? And see what are the, whatever the strategy is, what are you going to do when you get punched in the face? Right. And if that makes sense and seems reasonable and you test it and everything, that's fine. But anything that involves it goes against you and kicking the can down the road, or it goes against you and you're doubling your size and you're losing and you have the potential to lose 4, 5, 6, 7 times what you're making, you got to question it, right? And you got to look at that, right? And you can have, in this world of 0 day, you have people like Tammy, who to me does a stellar job, handling the risk, right? And you have two different things, right? You have this, I don't mean the example, should I mention the name or not the name? The captain, should I say that?
No, Captain Condor, yeah.
Captain Condor, you look at, it's like, and I don't mean this. I mean, I honestly, my heart goes out to those people who've lost, but it's like in terms of trading, I think of Wizard of Oz. You have what was the good witch and the bad witch, right?
Yeah.
And I'm not talking about people, but I'm just using this for a bad analogy. The good witch, not witch, because but you get the idea, right?
Yeah, we get the idea.
No, isn't she a good witch?
Yeah. I don't want to
somebody
say
on the chat knows.
See, now I'm mentioning.
I think she is also a witch.
It's not. So I'm saying good and bad. So you have
Mrs. Sheridan's going to come in.
I know. I'm in big trouble. I should stop on the head. But you say good, right? And how Tammy and others handle the 0 day is as well as any person can do it, right? And then on the other side, somebody may think, okay, it goes against me. I'm going to double it. I'm going to triple the size. That's just,
it's using the dark arts.
Yeah. And I'm more concerned. Again, I'm concerned with these 1,000 people who were on board. And I'm not trying to be, I've seen a lot in the last about things. And I've seen that on a professional end, right? I've seen it on, I mentioned this before. I knew a guy, outstanding guy, good trader, but, in the 80s, we were just going up, right? Until the 87 crash. And people were selling thousands of out of the money puts in OEX to precursor to SPX. I mean, thousands. The guy next to me would sell 10,000 of these every month. And they were like ready to make a statue for the guy, because the clearing firms didn't understand, a little bit of risk here. If the vol goes up and you got to, and that's the key. It's always if the vol goes up. And the next day, I remember he was down, and this is in the 80s, 20-some million. And he's like, no, you can't close those puts at a 212 volatility. You just can't do it. But you lose your leverage. It's like now you're playing, the brokerage firm says, you have no more leverage. There's none of your money left in it. You're out X amount of money. This is all our money. We're going, and they went into the OEX pit, precursor to SPX, at 220 volatility. I need to buy a strangle. And they almost got attacked. We almost needed Chicago policemen to guard them, because it's like, do you want to sell a strangle at 220? Sign me up right now. In all reality, when you're going through it, even though you knew is 200 volatility and it was high, you're still scared to sell it, because, when the 87 crash, percentage wise, that was humongous, right? And you thought the world was going to end. right? So it wasn't like, yeah, it's 200, just sell it. But, that's the principle there that, he lost the leverage and you can lose, these are volatility plays, right? And that's why I think is genius, when Matt and Troy and Rusty have talked about, I've got these little 3 delta put that I'll buy in terms of the portfolio every month. And I'm happy to just pay that as like a disability insurance or whatever insurance you want to call it, because all you need is one, and you're never going to get to the strike of the long put. But when the VIX goes from 20 to 60, like Matt documented, was that December when you said you bought a put, we had a big move down or something, and you made like $6,000 on a put or something.
Probably the yen carry trade, which was now 2 years ago in 2024, I think is the one we were talking.
You didn't have anything in December?
I had a zero. I had a 0 day in December. It was like it was a $20 put that made about 1,000, I think. I'd have to go look, but yeah,
there was a guy. I know there was a guy in the community who had a lot of those though.
Yes. It wasn't me. It wasn't me. It wasn't you, but there was somebody who had a bunch of 0 DT hedge puts. I just buy one every day, and maybe more than one. And I just know it's going to 0, but it doesn't always go to 0. And then it pays for me to buy more.
I just had an idea, and I don't know if this is legal or not. I mean, but it'd be interesting.
That's a great start.
Yeah.
That's a great start. Yeah, that's a great start. If you want to get interest from people, I don't know if this is legal. It's so good, but that's
I know. I was thinking about at first the market maker doing this back in the day. Your story about the newsletters piqued my interest. But let's say someone wanted to do a Captain Condor thing where they're like, hey, we're gonna like appeal to the masses. It retails the army now. We're in charge. I'll tell you what to do. I'll be your general or captain or whatever. And you say, all right, at 3:30, we are going to all sell a Condor that's, and here are the strikes, right? And so you do brilliant marketing and you get people that, 100,000 people to do it. And then you immediately just take the other side. Is that legal?
Matt, I'll let you. Matt's the complaint. No.
I'll be honest. You lost me on. Is this?
I would say it's massively illegal.
Yeah.
I mean, it'd be tough to explain in that situation. But in this situation like Captain Condor, and again, it sounds like he's a smart guy. It's just that I think just the risk management part needed to be. And wasn't he? Who was doing the? Was he doing the trade for the group?
I don't want to speak on it because I'm not an expert. What I read online is that there's a community of people that pay a subscription fee to get whatever plan or data it is. But yeah, I'm not an expert. I basically know what I read online, just like anybody else. I don't know the guy. And
well, I think Tom paid $6,000 a month for VIP.
A month? I think it can't be $6,000 a month. Okay.
The show's just slowly turning into us talking to Tom throughout the thing, which I love. So listen, I'm going to show this real quick and then we're going to run. But we're talking about risk management. We're talking about, the rails, things like that. But, we had to put some pre-rails on the portfolio. And so yesterday we showed a test that didn't make it into the portfolio yet. And we're going to show another one real quick, and the portfolio being the small account challenge portfolio. So this is one, and Matt, I'm going to just let you go through this real quick. But while we're talking about RICS, talk about what this trade is, and then I can talk about why I didn't go into the.
Oh, I don't want to call it my baby. It's not my baby, but I did work on this one a little bit. Is this my baby? I guess maybe.
Yeah, and I felt bad. I was the one that had to tell Matt. Said,
so here's the deal.
Make it.
This has a positive back test. Troy will talk about why it's not in the small account challenge, but I was just playing around with doing a delta Rick. So the prices is going to be varied. It works since dailies, Before dailies, it didn't work as well. Again, I think there's a longer conversation of how far back do you want to go. So we've got 240 occurrences since dailies. The tricky thing with a Rick in the small count challenge is assignment. And that's why it's exiting at 329, because there would be a lot of in the money exits. I felt like 329 was a safe enough exit just from me interacting with lots of people in our community who don't exit at 329. And most of their issues with broker and assignments seem to be very far after that. But the trick is a lot of the Ricks need to be the best Rick they can be. They need those extra 31 minutes. And then you also have to pay closing fees and slippage. And on a trade that can be, a buck or two, an extra, that's like a non-insignificant amount of drag. So those are the reasons why it's in SPY. If you do a variation of this in SPX and normalize the fees and commissions, I think you can find a backtest you might like. But Troy, why did this end up on the old chopping block?
Well, to your point about having to get out at 329 or get out earlier, applies even more, because it's you're danged if you do and danged if you don't, because you got to get out because of assignment risk, but also you can't get out a lot of times per week with pattern day trader.
Yeah.
And so
that was the other reason.
We were and I'm glad we did this. We were very careful to not put any serious risk of pattern day trader into the portfolio. And it doesn't take much. I mean, you think about this. If this is in here, I mean, this could do it in 1 week where we're moving, a lot. If we're up and the VIX is down, which certainly happens in chunks and patterns. If it happened 3 or 4 times in a row, you could get PDT on this one trade, and so,
yeah.
And so we just couldn't do it. Again, we're trying to show you guys this to say, if you're playing along at home, but you have more money than 5,000 in your account, these might be trades you might be interested in. We're trying to keep it really simple for people, presuming that they really just are starting with 5K in capital. But 2, Matt said, you could take this and apply it to SPX and play around with it. So it's an idea generator. And then 3, like we talked about yesterday, if PDT goes away, well, game on, baby. Like if pattern day traders ended, we got some stuff. We got some stuff we can do.
Yeah. Yeah. And again, there's better backtests than this. This is a simple non-curve fitted one. But like, I know that one of the days of the week is usually not profitable, but I left it on there. The only day I left it off is Monday. But again, there are constraints with PDT that we're aware of. Like, we know that there's constraints with it. So listen, we call it Uncle Rick when there's no short put. That's where the uncle comes from. I don't know who came up with that, but that's the difference between a Rick and an Uncle Rick. Is an Uncle Rick has no Uncle Rick, unlimited downside, or really unlimited upside to the downside, just like a crazy uncle.
Don't even tell him about drunk uncle when you make it drunk.
Oh, is that maybe a ratio? I don't know. Maybe
Rusty
that'll be another show.
Uncle Rick for a while. Anyway.
Hey, Troy, can I say just 20 seconds on this strategy? Yeah. I really like this strategy. And the only thing, and I'll just tell you, I like it. It's, when you think about it, you're pretty long delta, right? When you start, you got that, which is nice. I would guess, I don't know what the delta is per unit, but it could be 5 to 10 deltas long per unit. And in an up market, which we've had the last 3 years, this is, it's a nice strategy, and you got that 15 delta put if anything silly happens, right? And I really like this. Now, if you said to me where I'd struggle with this would be 2026, only because I'm looking at it like I can't drink the Kool-Aid for a 4th year, right? I just can't, right? you know, I'm dreaming of 2022 and I'm thinking I can't. So based on what I'm saying, folks, we're probably going to have a fourth year up 20%, but I'm saying I would struggle with this year. I would rather flip it, but we go up more than we go, you know, it's just 3 years where we're up 20%, 15, 20 to do this in 26. I probably would struggle with this, which means you guys probably should do it because it'll probably be the fourth year up. But I like this long delta.
Yeah, it's long. That's why I was going to say it's long delta though. Like,
oh, absolutely.
I think when you put it on, it's just the idea is this. This is a trade. Have you guys ever heard the expression, chat, stairs up, elevator down, right? Or stairs up, escalator down? I'm not escalator up, jump off the edge of the cliff down. Any of those sayings, which are in Texas and Tennessee, this is a trade about that because it's a call debit spread that's going to happen a lot more than the put. But when the put happens, it still provides a lot of downside velocity because it's if you get a real sell-off. Now, here's the thing. One of the things I like about this, try this. If you want to play around with it, as always, we encourage you to try different deltas. Like there are deltas all over that may make a lot more sense for you. On all three of the legs, try different deltas. So you can go closer on the call, make it closer to an at the money call. It's pretty close anyway, but some people like that. Some people like the put a little bit closer to the money. 15 delta doesn't happen all that often. So you can get a plus mar a lot of different ways with this bad boy.
Let me just say this. If you have no idea what we're talking about, on any of these words scare you, you just came upon this YouTube channel and you're crying because you're like, I don't understand what they're talking about. At 11 a.m. today, we're going to help you understand what we're talking about. And Dan, Option Trading for Beginners, starts in an hour and a half, 90 minutes away. You jump in the Discord, get the link. Looking forward to it. Fellas, listen, have a great 3-day weekend. I mean, surely someone's going to get bombed this weekend. That's the way I'm looking at it.
Listen, is the vol pricing that in at all? Because when you look at VIX 9-day is 12.3 right now.
Yeah.
Yeah. I could see Friday. I could see at end of day a little bit of pump, but I just don't think the market really knows what to do at this point besides go up. And
yeah, VIX is going to open around 1530. So I mean, that's
so if VIX 9-day could go to, this will be interesting. VIX 9-day could go to 6 this year. You think about the VIX at 9.
Jeez.
Like VIX 9-day could it might actually die. It might actually die.
Troy, we're gonna have to bring back our will work for VIX video.
Ooh, I love that. All right, guys, listen. I'm gonna run. I'm gonna eat some chowder, and I'll be on.